Welcome back. I'm Pratap here. Today is 20th February 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars. It is a highly expensive training course. But we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this YouTube playlist. You need to start your training from lesson 1. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. According to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So go to the join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. There you can find all the training instructions. If you learn this course according to my training instructions, you will become a very good independent trader in the coming days. Now let's get into the HLQ zone analysis. Yesterday, end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8. 8 high liquidity zones we identified. And we got 3 trades from 2 stocks. The first one is a BSE. BSE, we have a daily high liquidity supply zone. Our software identified this zone as a rally, one base candle, and then a drop candle. Rally, base, drop. So this 75-minute zone, this daily zone, we fine tune with 75 minutes zone. Let's go to the 75 minutes time frame. See, in the 75 minutes time frame, you have failed ERC candle as a leg-in. You have 3 base candle, 1 medium size leg candle, also part of the base, and then a drop candle with pro gap. So this is the way we identified the 75 minutes zone. Inside the 75 minute zone, we have a fine-tuned 15 minute zone. Here we have a 15 minute zone. We have a drop candle, medium size leg-in. You have 3 base candles and then a drop candle with pro gap. So this is the 15 minutes fine-tuned zone. Inside the 15 minute zone, again we should fine tune with 5 minutes time frame. Let's go to the 5 minutes time frame. 5 minutes, we have 2 zones. Look into this. This is the drop candle, 2 base candles, and leg candle is also part of the base. And then we have a leg out. And also we have a drop candle, 3 base candles, and a drop candle. We can also draw one more zone here. Actually, this is the right one. Yeah. And this supply zone is already violated previously. You may ask a question, maybe, even if you, maybe this is also looking like a medium, anyway, this is a medium size candle, this also can be. Then you need to draw a zone like this, right? Drop 3 base candles drop. This is also you can. But this zone is already violated previously. Let me show you. That's why I didn't draw, because the zone is gone. See, previously prices picked up the orders from the earlier zone. This zone is completely gone. This 5 minutes candle, it is violated completely. So that is the reason why I am not showing you this zone. But otherwise, this 15-minute zone is having two fine-tuned zones. One is at the inside the zone, one is at the distal line. Actually, this is not a fine, of course it is looking like a fine-tuned zone, but this is the horizon. This fine-tuned zone, this 5-minute zone is the horizon. You see here you have a drop, two candles base and one medium-sized candle part of the base. Maybe this is a little bigger than medium, but okay, fine. We are keeping, but this candle completely coming out of the zone, leg out candle. So this drop base drop is acting as an horizon. See, from this horizon, it picked up the orders and sharply prices came down. Not only that, from this horizon, previously once it is tested. See, when it happened on 5th February, how sharply it came. Okay, because this is the horizon, we can take as many as possible trades until it is violated. Today it gave 2 successful trades. I would not say completely successful, but partially successful. Why partially successful? Let me tell you. See, today what happened? Market started morning at 950 candle. It reached maybe a very small buffer, entry buffer, and after that it reached the 1:3 RR. It achieved 1:3 RR. And moreover, the trade is this 1:3 RR, it achieved in just 10 minutes time period. Within 10 minutes. And after that, it failed to reach 15 minutes, because 15 minutes target is quite far away from this area. Let me go to the 15 minutes zone. Here you have drop base rally. You may ask, rally base rally, can't we consider? No, I am not fully convinced with this candle, because the body is more than 60%, 50, actually more than 50%, even more than 60%. See, sometimes the body is between 75 and 50%, depending on the situation. We may consider the candle as either base or leg, in between 50 and 75. But this is more than 60 or even more than 65% body. So that is the reason why I am not fully convinced this is the base candle. Maybe rally candle, drop candle, rally candle. But this is a perfect drop base rally. So this is the reason why this is the target. But to reach this target, it has to wait for a lot of time, because it's quite far away. See, from here to here, prices should come down. Don't we achieve this target? We may achieve. But more ROI you have to get this. See, today what happened? Prices after that again turned up, moved up. So that is the reason why, see here I am calculating the performance of the statistics. Some of you might not have exited this trade. You might not have exited. Still you might be holding. If you are holding, you might have missed the second trade. If anybody exited at 1:3 RR, you get again another opportunity to get second trade. So that's why software point of view, it gave you 2 opportunities today. Suppose you exited exactly at 1:3 RR level. 1:3 RR it achieved. Suppose you exited at 1:3 RR level. Then you might have got a profit, 12,812 rupees profit, which is 5.2% return on the investment. See, here we got 12,000, but ROI is still 5.2 only. Why? The reason is the future margin cost is around 2,45,000 rupees is there. The margin cost of one future. That's why our ROI is reduced, even though the overall profit increases because your investment is more here. You need to invest 2,45,000 rupees for buying one future. That's why your ROI is reduced. Suppose if it is 1.5 lakh rupee future, maybe you might have got around 8 or 9% ROI you would have got. But anyway, this is up to 1:3 RR. Suppose if you exited at 1:3 RR, again see after that prices moved and again gave one more trade. And then reached, but failed to reach 15 minutes target. Even failed to achieve 1:3 RR here. Because the prices should come some more little down. Here 1:2.7 ROI it achieved, 1:2.7 ROI up to here. From here entry to here 1:2.7. So 1:3 slightly missed here. But still, you need to exit this trade because here there is a 1 minute. See, first time when prices reached here, we are not aware of this 1 minute high liquidity zone. Why? Go to 1 minute, you will understand. Here we have a 1 minute high liquidity zone. We have a rally, base, 1, 2, 3, 4 base candles and a rally. See, first time it is tested. Second time when prices are reached, it looks like this zone is almost getting violated, but it did not. Prices reached near to the distal line and again started moving up. While moving again, you see, we have a drop. Maybe this also you can consider as a drop by adding the hidden body. Drop, 2 base candles and rally. Of course, this rally is not a very great rally. But at least you can understand some price action, some new order flows are added in this area again. Again, now you got the trade. Once again it reached here. By this time, do you realize this is the high liquidity zone? You may or you may not. But you might be hoping that prices will further, this zone will be violated because earlier prices came close to the distal line. You might be hoping this will be violated and now prices will reach this 15 minutes target. This is the way you might be hoping. But that didn't happen. Again prices moved up. Now you have to realize. See, moved up and again came to the close. Again moved up, again came to the close. Now this time prices again here. Definitely you must exit. There is no other choice. Why? Because this is a high liquidity zone holding the prices. You doesn't know how long it will hold. Is it going to be violated? Again this zone will push the prices. This your entry zone will be violated. If it is violated, your trade will be stopped out. Anything will happen. Already you got decent profit. From here to here to this 1 minute zone, you already got a decent profit. And moreover, this is acting as a high liquidity zone. Maybe we didn't have confirmation at the time when it reached 1:3 RR. This is a high liquidity because price action is still moving. Probably after the third time it is tested. This is the first time, this is the second time, this is the third time when it is tested and it did not violate and prices again moved up. At least you should realize this is a high liquidity zone. And then it gave you another opportunity to exit the trade. Fourth time. Now also if you don't exit means that's it. We can't do anything, right? Because it gave you enough clues to confirm it is a high liquidity. So definitely you have to book. Because you don't know whether this is really going to be violated or still it is testing here and wasting your time, or it will be moving up and your entry zone will be violated. You never know. Already you got enough confirmation to understand this could be a high liquidity area. So this is the time, in case if you did not book the profit here, this is the time to book the profit. Because high liquidity zone areas are also target zones. You already learned in the previous HLQ zone analysis videos. Several videos I've been explaining this point. The moment you sense a zone is acting as a high liquidity zone, maybe 1 minute level or 5 minutes level, you must book your profit. Forget about RR is achieved or not. Because already you are in the trade. The point you should not forget, already you are in the trade. The zone may not let the prices to go further down. That is the power of the high liquidity zone. That is what you've been experiencing all these days. If you don't respect high liquidity zones, most probably you won't get good profits. If you don't respect high liquidity zone, the way you need to book your profit, you don't book your profit. Instead of getting profit, you will get losses. This is a classic example. Let me show you. See, after that what happened? Prices stayed near this zone for a lot of time, and then prices were started moving up, and this time this entire zone is violated and your trade would have been stopped out. See, this is your stop loss value. Already hit the stop loss here. Okay, already we took the trade. If anybody, maybe definitely you may feel third time also you can take a trade you get. If anybody would have taken a third trade, maybe your third trade would have been stopped out. That is okay, because already you enjoyed profits from two trades. A small amount you will be losing from the third trade if anybody would have taken third trade. You have to ignore that. That is a negligible. Not even you should think about that. What is the characteristics of high liquidity zones or lower time frame zone as an horizon to the higher time frame zones? They will provide multiple tests, those zones. So we have to enjoy the profits until the zone is violated. We don't know how many times the zone will be tested. See, already tested 2 times today. This is the first time, this is the second time. Third time also tested, but this time it is violated. So that this is the way you would have got a small loss here. That is okay. Because already you got enough profits here. What about the second one? Second one, maybe you would have exited. It definitely may not be here, but we should exit here in this area. So that way, second trade you would have got a profit, 10,100 rupees profit. First time you got more because you achieved 1:3 RR. Second time you exited by realizing it is a high liquidity zone. So that way you got 10,000. Still it is a decent profit. See, both the trades together you would have achieved 9.3% ROI. Both trades together, because your investment is same. First trade you took, you exited the trade, your funds are released, same funds again used for the second trade. That's why both the trades together, the total ROI is 9.3% on the same capital. So those who have taken trades in the BSE, you would have got good profits. See the power of lesson 22. Lesson 22 is a new concept I developed, a lower time frame zone as an horizon to the higher time frame zone. Many times this concept gave very good profits. Even today, 2 times it has given you trade opportunities. Those who did not book 1:3 RR, probably you would have taken only one trade today. Why? Because again prices moved, once again reached the entry. Because the same, your capital is already struck in the first trade, I don't think you will take the second trade. Now again prices reached here, probably again moved. Now you might have, see, by the time prices reached and started moving, you might have realized. What we would have realized, this is a high liquidity area. The moment you realize high liquidity, first what you do, you look into 5 minutes time frame. 5 minutes you don't have you have a zone actually, but that is violated. This rally base rally is violated in this candle. So that's why what you do, you go to 1 minute time frame or 3 minutes maybe also you see. The moment you go to the 1 minute, then you will realize here you have a rally base rally. If you go to 3 minutes also, not very clear. 3 minutes you would have drawn a zone here. All 3 base candles. You have even bigger risk. But prices went very deep. So that's why you will look into 1 minute, definitely. So this is the area perfectly, a zone is there. Rally, 4 base candles, rally. This is the one already tested. And second time it is tested. Third time it is tested. Fourth time definitely you have to book the profit. Okay. So this is the way BSE has given 2 successful We should not say successful. 100% successful means it is up to 15 minutes target. Partially they are successful because both reached their targets. One is RR level point of view and another one is high liquidity zone point of view. But how many takes you have taken, that is depending on your trade plans. Those who are very strict about looking for this 15 minutes target, you might not have booked the profit once prices reached 1:3 RR. We don't book the profit because our aim is to achieve this. But unfortunately, prices again quickly moved, once again touched this zone and again came down. Now you will realize, what you will realize, this is the area prices are holding. Now you will identify there is a 1 minute zone. But by the time prices again moved up, next time again came, definitely you will book the profit. That's it. That is the way. You might have got only one successful trade. You would have got only 10,000 rupees profit. Instead of getting two profits, you would have got only one profit. But anyway, profit is a profit, right? But high liquidity zones point of view, it has given, performance point of view, it has given two opportunities. How many opportunities you utilized, that is all depending on our trade planning or trade management. That's it. Okay, after that BSC is violated. And this entire fine-tuned 75-minute zone is also gone. Okay, this is about BSC. And next one, we got one more trade, ICICI Bank. But I want to know how many of you took trade in ICICI Bank, because the analysis you should do properly. If you did not do analysis properly, this will be a learning for you. Please focus what is the learning. And why I am saying this is not a fine-tuned zone, this is an aggressive trade setup. What kind of aggressive trade setup? High liquidity zone aggressive. Lower time frame high liquidity zone. That way you would have taken this trade. So those who are very much interested in identifying lower time frame high liquidity zones, maybe you might be planning aggressive trade setups. That way you would have got the profit. Let us see. First of all, this is a daily zone. ICICI Bank is a daily zone. How our software identified? A rally candle with a hidden body, rally candle, two base candles and a drop candle. This is how our software identified this zone. Okay, this one we are fine-tuning the zone. First 75 minutes. 75 minutes, I have identified two order flows. This is the one, rally, base, drop. Rally, base, drop is a 75-minute zone. And another one is rally, base, drop. Okay, this is a medium size. You can also keep inside. But why I have gone for this type 3 proximal entry is now it is exactly inside the zone. See, have you noticed? I have drawn the zone up to type 3 proximal. Why type 3 proximal? Because this is now inside the daily high liquidity zone. I don't want to go and plan my trades outside the high liquidity zone area. Always make sure your order flows are within the main high liquidity zone. What is our main high liquidity zone? The daily zone. So you should make sure all your order flows or fine-tuned zones are inside the high liquidity. Even if you draw outside, but your actual fine-tuned zones, you should plan inside the daily zone. Maybe the final zone, 5-minute zone, partially inside, partially outside. Okay, we can accept, because risk management, we can able to handle that. But not at 15 minutes or 75 minutes level. You should not draw zones outside the, and in that outside area you should not fine tune the zones. So that's why, without having confusion, what I did, rally up to type 3 proximal and then a draw. Actually this is a part of the base candle. Base, because it is a medium size candle, part of the base. This is the leg out candle. But have you noticed this zone is already tested? Yesterday also it is tested. So multiple times the 75-minute zone is tested. Okay. So that means this could be a high liquidity area. That way some clarity we get. These are the price action clues. That's it. Now let's go to the 15 minutes. You get better clarity. Go to the 15-minute zone. 15-minute zone, the structure is not very clear. Maybe you can draw a rally 1, 2, 3, 4 base candles and a drop candle. That way you can draw like this. But this is not a great leg out. Again, after the drop is started. But still, you can compromise and you can draw 15-minute zone like this. This is the way you can draw 15-minute zone. But anyway, I didn't draw because I am not fully convinced with this leg out. But then I went to 5 minutes time frame to find the high liquidity zones in this area. The reason is this is the area being tested several times. See here, first time, second time, third time, fourth time. This is yesterday, fourth time. Of course, today, fifth time, we got the trade. That is a different story that we will see later. So that means this is an area we have a high liquidity zone. So I want to identify 5 minutes high liquidity zone. Because the lower time frame, 5 minutes high liquidity zone, we don't bother whether it is a fine-tuned zone or whether it is not a fine-tuned zone. We don't give much importance because it is a high liquidity zone which is there inside our main high liquidity daily zone. That itself is good enough to plan our trades. But I don't have proper clarity on the 5 minute zone. Maybe some extent I am convinced maybe I can draw rally 1, 2, 3 base candle. Maybe this is a leg out because big candle. But see, when I draw the zone, have you noticed this body is closed inside the zone? It is not a convincing. Your body should come out of the zone. In the leg out, the fundamental principle is the body should come out of the zone. Complete body is coming or partial body is coming, it doesn't matter. But finally, at the time of closing, the body should come out of the zone. But the body is getting there inside the zone, if you consider this as a base candle. But still, see, so many candles it is holding. Then I thought maybe, and one more time frame lower, maybe it may give, that is one option. Or you already land 3 minute zone is a supplement to the 5 minute zone. 3 minute zones can be used as a supplement. So that's why I went to 3 minutes. Now you see the actual magic in the 3 minute zone. Go to the 3 minute zone. Here you see, you have a rally candle as a leg-in. You have 1, 2, 3 base candles. You have a drop candle. And then prices were holding within the zone, moving down and again going up, again going down, moving up. Well, coming again here, drop base, drop, not a great leg out, but some order flows might have been added again here. That means a lot of price action is taking place here. But is it good enough to consider based on this? No, this is a newly created zone. At the time, a lot of price action. I want to observe even after that. After that, again, you see, price entered once again. 13th February, same day, came down, but again, still I am not convinced. At least one more test confirmation. See here, one more time it is tested when? On Friday, 14th February. While going, again, did you notice rally, base, drop is created, LOTL zone is created. Excellent. Again, next, once again, there is a good move it has given, very good move. After that, once again, prices came. Now, did you notice again rally, base, drop, follow through candles. And even bigger move it has given this time. Earlier it gave a good move. Now, even much bigger move it has given. This is on Friday. Which date? 14th February. That means this is the 3 minutes area working excellent in a beautiful way. 3 minute zone is working. High liquidity zone. Now next, after February 14th, the prices are again tested in this zone. Yesterday it is tested. Yesterday almost while closing the market, before closing the market, see, prices entered and once again sharply it pushed the prices down. See the rejection. So that is the reason why this is what we observed while analyzing your chart yesterday, end of the day. Yesterday I published the report. You might have observed all these price actions. By seeing all these price actions, you don't want to miss this zone. We know every high liquidity zone will be violated one day. Before violation, whatever the profits the zone will give, we will try to enjoy all the profits. If you would have identified this zone a little earlier in this area, probably we would have got another better trades. Yesterday anyway we can't take the trade because it is at the closing hour. Definitely you won't plan the trade. But today you see, again today prices entered. Morning 9:15 candle, but morning 9:15 1 minute candle you don't take the trade. But is it 9:15 1 minute candle? No. It is at 9:16 candle. Definitely we will plan our trade. Definitely some of you also might have, if anybody observed this high liquidity zone, some of you might have placed your order in this zone. But the real challenge is, have you gone up to 3 minutes level or not? That is important. Because I know some of you will compromise at 5 minutes level and you will leave it. But why I didn't leave? Because I have seen so many price actions in this zone. That's why I don't want to miss. Because I don't want to miss how I analyzed, I moved from one time frame to another, 15 minutes to 5 minutes. 5 minutes also structure is not convincing. Then I went to 3 minutes. 3 minute structure, I am very happy. Perfectly it is working. And moreover, 3 minutes zone could be used as an alternative to 5 minute zone, as a supplement. So that's why this is a perfect zone to plan our trades. Today ICICI Bank entered into the zone. See, morning 9:16 candle. This is 9:15 green candle, rally candle. Next 9:16 candle, prices went a little inside, they went a very little. By this time you would have already got the trade. Maybe some of you might have kept some small entry buffer also. I would not say 0.1%, small also you would have kept. And after that prices came sharply, it reached the 15 minutes target zone. It reached. Where is the 15 minutes target zone? Here we have a 15 minutes rally, base rally. So here it reached. When we got the trade, morning 9:16, and when it reached the target, morning 9:30, 15 minutes candle. But let's go to, so morning 9:40, 15 minutes candle. Let's go to 1 minute exactly, you know, when it reached the target. Your target is reached in this candle, 9 o'clock 42 minutes. That means less than 30 minutes your trade is completed. In less than 30 minutes. And this is the way in less than 30 minutes ICICI Bank has given you 7,420 rupees profit, which would be 4.8% ROI as per one futures margin cost. You may say the zone is looking a little bigger zone. Risk, is it within 2% level? Yes, risk is within 2% level. The risk of this zone is around 1.4%, including stop buffer. The risk of the zone is 1.4%. Some people may don't accept 2%, maybe they accept 1.5%. They will also get the trades. If anybody don't go beyond 1%, you might have missed this trade because of your risk management point of view. For example, if you ask me, I accept up to 2% level, up to 2%, I consider. Some people may consider only up to 1.5% level. That is up to the individuals. But whoever is, we cannot go beyond 2%. If you accept, that is also okay, but that is against the fundamental principles. We should not go against the fundamental principles. Every time trades won't be in our favor, right? Protecting capital is also important when trades are stopped out. And it is a very perfect trade. 5 minutes, this is a 3 minutes high liquidity zone. See, this is the power of our high liquidity zones concepts. Why always we are getting more profits? This is the advantage. See, Because of high liquidity zone only we got 4.8% ROI, good ROI. Of course, today's trades did not reach 6% ROI, but still. Do you remember yesterday we discussed about Nifty? There is a high liquidity zone, 5 minutes high liquidity zone, how powerful it worked. See, today also, see, Nifty, look into the Nifty. Let's go to 5 minutes. See, today also the same zone. This is the one we discussed yesterday. Our NeoStock software identified this 5 minute zone. In Nifty, Bank Nifty supply demand zone chain, we have this high liquidity zone. Yesterday we have drawn this zone based on that only. See, yesterday it gave very good profit, 147 points. But today also it gave. But today it gave only around 90 points, only it gave. Close to 100 points, few points below 100 points. Today's Nifty range is within 100 points only. Today's overall Nifty range. Today's overall market movement is a very narrow range. Generally it happens. You know what happens? The structure of the volatility. When the volatility is reducing, price movements also will be very narrow range. So few days prices will be moving in a narrow range, and all of a sudden volatility breakout will take place. When volatility breakout takes place, prices will be moving out of the zone. If the breakout is towards the upside, and very fast prices will be moving up. Again rally will start in the market. If the volatility breakout happens towards the downside, immediately the drop candles you will see in the market. Okay, how Nifty is going to be, what kind of volatility breakout will take place in the coming days, that we have to wait and see. But whatever it is, one point we should not forget, we are at the monthly area of the Nifty. Currently Nifty is there inside the monthly zone. If the volatility breakout happens towards the down, still it is not a problem, because so many order flows are there in the monthly zone. We already analyzed monthly chart. Please look into the old videos. Almost 1 month back, I think January 14th or 13th or 15th, one of these days we analyzed. See, so many order flows are there inside the monthly zone. Currently this is the area how strongly Nifty is holding the prices. But if the volatility breakout happens towards the upside, definitely the breakout will take place in the next few days time period. Maybe it may happen tomorrow, or maybe it may happen after 3 or 4 days. Anything is possible. Then we will see Nifty will be sharply moving. Probably again it will reach its weekly supply zone from here. After that, again depending on the market situation at that time, again price direction will be, again prices will, once again it will come down, or this will be again our institutions will increase the demand and they break the supply zone. That we will see, all these things. We can't predict everything today. But today market is moving in a narrow range. See, last 3 days you have seen. Market is moving in a narrow range. That's why you have noticed the last 2 days we didn't get any trades from our high liquidity zones. When volatility is very narrow down in Nifty, getting high liquidity zone trades are not easy. Execution of high liquidity zones. Even if they execute, we get very low ROIs. You get 3% or 4% ROIs only you will get. Still we get a decent ROI only. Intraday point of view, they are very big ROIs. But high liquidity zones point of view, they are less ROIs. Once the volatility breaks down, then probably we may get big ROIs at that time. Okay, here we slightly deviated from our discussion. I am talking about high liquidity zone, the 5 minutes high liquidity zone. See the daily candle. All these daily candles are held by this 5 minutes high liquidity zone. 3 trades it gave. This is we identified the 5 minutes high liquidity zone on 17th February. End of the day, our software generated this high liquidity zone. Those who are trading on this 5 minutes high liquidity zone, because we have some traders in our subscribers, they trade only Nifty and Bank Nifty. They don't look into the others. And every day they will be using these Nifty, Bank Nifty supply demand zone chain based on the high liquidity zone. See how many successful trades they got. Our Nifty Bank Nifty traders. This is the first successful. Definitely more than 100 or 120 points they might have captured. This is yesterday we discussed. Yesterday captured 147 points or 146 points they captured. Again here we have a high liquidity supply zone that again pushed with the stop buffer slightly pierced. This 5 minutes high liquidity zone no more valid now. The supply zone because it is pierced. But yesterday it has given again another opportunity, maybe some 70 or 80 points move it has given yesterday. And today again the demand zone, high liquidity 5 minutes demand zone, once again it gave another trade opportunity. Today it gave close to 90 points move it has given, a little over 90 points. Definitely 80 points move you would have captured, definitely. All these are all profits, right? How high liquidity zones are working, that's why identifying lower time frame high liquidity zones are very big, very good achievement. Any high liquidity zones, when you identify zone having multiple tests, don't leave them. Anyway, you can't find fresh high liquidity zones. I agree with that. But at least after testing 2 or 3 times, at least we can recognize at 80% level. See, this is a fresh high liquidity zone. Our software identified. After that, multiple tests happened from this zone. Same thing we did in ICICI Bank, nothing more. How I identified this high liquidity zone manually? By seeing all these rejections. First I have seen the rejection on the daily candle here. First of all, here a sharp rejection took place. From the same area, second rejection took place. And yesterday again from the same area, small rejection I have seen. See, it's a rallying today, all day. Who stopped this rally? This area is stopped the rally. That means in this area, strong order flow. See, when this particular ICICI Bank is moving so strong yesterday, why it stopped here? Why it didn't go further move up? Who stopped ICICI rally yesterday? That way you have to think. This is how you should analyze your charts while analyzing. That means some strong institutional order flows might be available here. That way you have to understand. The moment you understand, then what you do, you go to lower time frame, and in these rejections area, you will see any zone is there. See, perfectly we have seen a rally, base, maybe medium size part of the base, and a drop candle. But these rejections are coming from our daily high liquidity zone. See, every time prices enter into the daily zone and from there they are coming. That means inside daily we have a fine-tuned 75 minute zone here. That way from 75 minutes further you should go to 15 minute zone. That way 15 minute zone, maybe you can identify, maybe here some. We have a rally, so many base candles and a drop, but its structure is not very clear here. So that's why I didn't bother about 15 minutes is clear or not. Some rejections are coming, lower time frame, high liquidity zones will be there. That way I went to 15 minutes, even though the 15 minute structure is not good. Here 5 minute structure is also not good. Even then what I did, I went to 3 minutes time frame. And 3 minutes I identified a proper structure. We have a rally as a leg in, 3 base candles and a drop. The moment I draw, see how it is holding. After that, see how it is giving you the trades. And even yesterday, this is the one when it was rallying, ICICI Bank was rallying, but finally here it stopped and then pushed the prices down. Sorry, here in this candle. And today market started at 916 candle, prices entered, we would have got a trade here, and after that how sharply it pushed it down and prices until 15 minutes target zone. So within half an hour your trade is completed. So that's why I would like to know How many of you did this kind of level of focus on your analysis and captured this trade? If anybody captured this trade, please put them in our comment section of the video. At least I feel happy. You know, the biggest happiness I get the day when you guys get the profits. When I come to know you got profits, that is the most happiest moment for me. Why you learn all these concepts all these days? Why you spend so much of time? Why you are so dedicated? Why you did so much of paper trading, all these things? Why you become a disciplined trader? Because you want to get good profits, right? That is the ultimate goal. You know why I get the happiness? Because all whatever the efforts I put for all these days to make you become a good traders, my efforts gets justification. When I feel justification not after you complete the course, I won't get any justification. The day when you say I'm getting profits, then I get justification for all my efforts. Okay, and remaining trades we didn't get, but one stock, Cholamandalam Finance, this is a 75 minutes high liquidity zone. Some of our fine-tuned areas are violated right here. See, you have a fine-tuned area, it is violated. Is it stopped out? No. Why? Because this zone is already tested, so we didn't plan any trade. How it is tested, we will see. First of all, this is a 75 minutes high liquidity zone. How our software identified this as a failed ERC candle as a leg-in, 1, 2, 3, 4 base candles and a drop candle. This is how we identified. And this zone, prices went recently more deep inside, and here lot of order flows, again they created institutions. So let us see in 15 minutes time frame. See, 15 minutes we have 3 order flows. See the first one, rally, 3 base candles and a drop. See the second one, drop, 1, 2, 3, 4 base candles and a drop. You may say here also we can draw drop, 1, 2, 3, 4 base candles and drop. No. The reason is if you draw a zone, see entire leg out candle is inside the zone. See, leg out candle is inside the zone. You can't draw such kind of zones. They are not valid. The body should come out of the zone. At least a minimum considerable amount should come out of the zone. Otherwise it is not a valid zone. But next, this one definitely valid because a drop, 1, 2, 3, 4 base candles and a drop. But a small portion came out of the zone, right? Okay. While fine tuning, make sure your fine tuned zones are inside the zone, or worst case scenario, they overlap at the proximal line of your main zone. Your main zone is 75 minute zone. So we are in the 15 minute zone only. Next we have to go to the 5 minutes time frame. At the time we take decisions. Now go to the 5 minutes time frame. In all the 3 zones we need to draw fine-tuned order flows. First let's start with the upper one. See here you have a drop, 3 base candles and drop candle. A fine-tuned 5 minute zone. Is it tested? No, it is not tested. It is a fresh zone. It is a fresh zone. But before that, one more zone is created in the below. You have a rally, 2 base candles and a drop candle and follow through candles. This is the way you can draw. But is it tested? Yes, it is already tested. Because it is tested, can you plan a trade? No, we can't. When we plan, if we confirm it is a high liquidity zone, then we will plan. But as of now, this is a normal zone as of now. So we can't plan any trades. Maybe it could be high liquidity, but manually we can't identify a fresh zone is high liquidity or not. So that's why, so manual point of view, at least identifying high liquidity zones, we are practicing. Fresh zones point of view, we have to depend on the software. At the time you don't have any access, right? You have access only Nifty, Bank Nifty. So that's why don't think about the lower time frame high liquidity zones at this point of time. If you really want to know, you need to purchase individual stocks supply demand zone chain. That's a highly expensive service, that one. Because single stock we are charging 1,000 rupees. So that's why I don't expect you people to look into those supply demand zone chain reports. But as of now, manually you can predict. After seeing some 2 or 3 times, multiple times the zones are tested or LOTL zones are created from the same zone. That way we are assuming that area high liquidity will be there. At least 80%, not 100% accurate, 80% accuracy level. We can predict a zone could be a high liquidity zone. See, whatever you are identifying high liquidity zones manually, they are 80% accuracy level. Please remember, 100% accuracy only confirmed by our software. So this is anyway tested zone. You can't plan a trade in this area. And what about this rally based drop? This is also tested. So you can't plan a trade. And this is the one violated, right? Actually, this is the one violated not easily. It is already gave one successful trade. Reached 15 minutes target today. See today, what happened first? Prices entered. It gave you a trade at 11:30 or 11:25 candles. It gave you. And then prices came down, reached 15 minutes target. See here. You have a rally base rally. It reached this 15 minutes target. But you can't take a trade. One thing is it is already a tested zone. You don't plan. Second thing, even if you plan, you won't get RR. RR won't be, you won't be getting RR. This rally based rally. Till here, you know how much RR you get? Maybe 1:2 RR you will get. Or even less. Let us see. Some stop buffer approximately added. Maybe this could be your entry. And your target will be up to here. You would have got 1:1.59 RR, right? That's it. That's why you can't take a trade. Or you need to fine tune. If you fine tune, you move it up until you get 1:3 RR. Is it reached? No. Slightly it missed reaching there. So that way also you might have missed. But anyway, we didn't plan a trade in this zone because it is not. Suppose if prices came down and again tested multiple times here and then price go down, next time we will plan. The small movements we will ignore. Let us assume again tested third time, prices went down. Maybe we will consider this could be high liquidity. Now you see the zone is violated. It is gone. Why we didn't plan? Because it is already a tested zone in this candle. Let's go to the 5 minutes. You get better clarity. See, it is already tested here. Similarly, this one also we did not plan. But anyway, today prices did not reach up to that level. And the rest of the stocks we didn't get much. Canara Bank is a daily high liquidity zone. Supply zone. We have a drop base, 2 base candles and a drop candle. This one I fine tuned with 75 minutes time frame. We have 2 75-minute zones. Drop, 2 base candles and a drop, and again drop base drop. And the first drop base drop we don't have any fine tuned zones. Why? We will see in 15 minutes. See, 15 minute structure is not good. See here, you have a drop candle, you have another drop candle, in between no base candles. Earlier so many base candles. So this zone we don't have any interest on this. And what about here? Here you have a drop candle, you have 1, 2, 3 base candles and a drop candle. Drop base drop. And this drop base drop again fine tuned with 5 minutes time frame. See the 5 minute zone here. You have a drop candle, you have a base candle, and you have a drop candle. So this is the area you can plan the trade. Type 2. Draw wick to wick. You see surprisingly again rally, base candle, drop. LOTL is created here. Maybe that's why I'm saying this is the area we have a strong order flow. Risk point of view, type 2 proximal we have planned, risk management point of view. And today prices did not reach up to that level. Next one, Glenmark. This is also a daily high liquidity supply zone. And Glenmark already we discussed yesterday also. It doesn't have a fine-tuned zone. 75 minutes, okay. Drop base drop, but 15 minute structure is not good. See, you have a drop candle, you have another drop candle, no base candles in between. So we don't have interest on this. ICICI Bank we discussed. Manappuram is a 75 minutes high liquidity zone. Sorry, daily zones, not 75. Daily zones. ICSC is also 75. Glenmark is also 75. This is also 75. Manappuram. This is a high liquidity zone. How our software identified it? As a rally candle with hidden body. This is a rally. 1, 2, 3, 4. 3 base candles and a drop candle. That way our software identified this zone. And this one we fine-tuned with 75 minutes time frame. In the 75 minutes time frame, we have a rally base drop. Excellent zone. This rally base drop 75 minutes again fine-tuned with 15 minutes time frame. In the 15 minutes, you have a drop, 2 base candles and a drop candle. This 15 minute zone again fine-tuned with 5 minutes time frame. An interesting thing we will see in 5 minutes. See here you have a drop candle. You have 1, 2, 3, 4 base candles and again a drop candle. This is the 5 minute zone and type 2 proximal level. And also, did you observe here drop base drop? Type 2 proximal I have drawn. This is a type 1 proximal. Type 1 proximal, see, tested once, tested 2, 3, 4th time. It picked up the orders and entire fine-tuned 75 minute zone formation has been completed. That means this 5 minute zone is the origin for this entire fine-tuned 75 minute zone and also acting as a high liquidity zone. But I have drawn type 2 proximal point of view, risk management point of view. But actually type 1 it is tested 3 times already. This is the 4th time. That means this is a 5 minute high liquidity zone and also this is a origin. This 5 minute zone, high liquidity zone is an origin to this 75 minutes fine-tuned zone inside the daily high liquidity zone. So this 5 minute zone is a very important zone. And this zone is already tested. See here? Just tested, but looks like type 2 proximal is just before, maybe 5 paisa before again moved. So can we plan a trade again second time? Maybe. Sometimes it may work. Sometimes it might be violated. So that's why it's up to you, your individual. But already tested once, that way you have to consider. But nothing wrong in planning one more trade also if risk is within your accepted limit. But anyway, today prices did not reach this area. We didn't get any trade. Next one, India Cement. This is a 75 minutes demand zone. But you know, when this demand zone is created almost some 2-3 years back, 24th August 2022. So we can't fine tune up to 5 minutes level, only 15 minutes level only I fine tuned. 5 minutes you can't fine tune. So that's why I just left this stock. So it is not part of our watch list. But because software is generated, we are focusing on this. But trade point of view, no focus on this stock. Cholamandalam we discussed, and the last one is UPL. UPL is also 75 minutes high liquidity supply zone. This is also very old zone. When it is created, in May 2023. So almost 2 years back. So we don't have any data, 5 minutes data. So that's why any 5 minutes fine tuning is not there here. Only 15 minutes I have drawn. That's it. These are the high liquidity zones identified from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.